Hello everyone and welcome to the Blockchain Startup Show. I'm Avan Dabash. Now in this episode, we talk about something basic, something as simple as an insurance policy. Now if you give it a thought, in our society, we could hardly function without insurance. There would be so much uncertainty, so much exposure to an unexpected or a catastrophic loss that it would be difficult for anyone to plan with confidence for the future. With technology impacting all aspects of our life, how could disruption in the insurance space be left far behind? Can you imagine a world with blockchain or cryptocurrency along with the term insurance? I know what you're thinking. Crypto and insurance seems like an impossible coupling. But have you ever wondered about the insurance in the Web3 world? Web3 actually has the potential to change how insurance companies do business. It can help companies to save time, cut costs, improve transparency, comply with regulations, and build better products. Introducing Evertas, which is believed to be the world's first crypto insurance company. The company applies old principles to new risks. Evertas has created the only full-cycle insurance available to date and boasts a best-in-class underwriting framework. But to know more about the company, please join me in welcoming on board Raymond Zenkich. Raymond, welcome to the show. I'd like to start off by asking you what led you to create Evertas and how has the journey been for the company so far?
Hi, Yvonne. Thank you very much for having me today. Great question. I mean, we've been working on Evertas for over 6 years. So our journey started back in 2015, really around blockchain. My background was insurance and banking, and really understanding how disruptive technologies can impact industries. And as a matter of fact, I even had a conference regarding blockchain insurance back in 2016. And the real focus was around how blockchain would change the overall insurance industry. I would say then, and even more so today, there's a recognition that blockchain and cryptocurrencies were, and I want to argue, are poised to really change financial services in ways that'll be very exciting going forward. However, and this is really important because part of our journey really began with the recognition that was and still is, we would argue, a key missing piece of infrastructure, and that's insurance. And at the time, and even today, large companies operating in this space had a very hard time obtaining even very basic insurance coverages. So you can think about things like directors and officers insurance, or errors and omissions insurance, or even crime or theft, which is theft or loss of digital assets. Very difficult to obtain at the time, and still difficult. That's been the problem that we've been focusing on exclusively. So we focus exclusively on the crypto asset space. And our view is that, especially if you think about how technologies have evolved over time, is that insurance really drives professionalism. It also drives standards and ultimately drives consumer protection. So our journey, taking a look back, is really about building out this much needed piece of crypto infrastructure, of insurance for crypto. And I'm excited to talk to you, Yvonne, about that today and share with you the success that we've had.
Now, Raymond, because the crypto insurance industry is so nascent, how do you actually define a policy framework?
Great question, Yvonne, and one that, again, we've spent over 6 years on. So it's a bit difficult to kind of discuss it, at a high level without going into the detail. But I think what's important to understand is that the risk that custodians or exchanges have around the theft or loss of digital assets is complex. I mean, you are talking about, complicated technologies, we've identified over 22 categories of risk that we look at, and we spent the time to really not only ask questions, but understand potential responses, be able to drive, in some cases, automated scoring, which is really important from an underwriting perspective. But fundamentally, the way we were able to solve this difficult underwriting challenge is to bring together a really unique team of people. We brought world leading insurance, legal, security and crypto experts in our firm. For example, our chief security officer was working on digital cash over 20 years ago. And we had to build a comprehensive and scalable underwriting framework spanning over 22 categories to help us understand the risk, to help us understand pricing. And these are all really important because we had to develop a fit for purpose policy form. And the policy form is fundamentally what you're getting with from Evertas, from an insurance company. And it has to address the coverage needs that we want. And, for Evertas being multi-line insurance company, we're offering what we view as really the key pieces of insurance that anyone operating in the crypto space would want to have. So for example, I mentioned earlier, crime or theft or loss of digital assets. That can extend to both cryptocurrencies, but also fiat, right, or non-crypto. It's really important for custodians to have coverage for both. We also cover fidelity, which is internal theft. So think of an employee potentially inappropriately obtaining access to digital assets or taking private keys, for example. We also offer coverage for smart contracts, an emerging area that we think is incredibly important. Property, so non-fungible tokens, digital assets. I know you've had other guests on your show talking about NFTs, and that is emerging very, very quickly in ways that we perhaps don't even understand today. Every few months, it seems to be changing, but it's a very exciting space and requires expertise that Evertas has to understand the risk and write policies. Also, technology errors and omissions, also known as tech E&O. We provide that for both slashing and staking. Again, emerging, but very important. And we have the in-house skills to assess the risk. I mentioned directors and officers insurance earlier. We also offer cyber protection. And another area that's related to the actual implementation of cryptocurrencies or digital assets is the actual mining. So for crypto mining, we also offer property coverage for the data centers themselves. So, we're looking at the crypto asset space as broadly as possible and making sure we can offer all of the coverages that anyone operating in the space wants to see: crime, fidelity, property, technology errors and omissions, directors and officers, cyber, as well as extending property insurance to crypto mining operations. Hope that answers your questions, Amana. It's a bit of a mouthful.
Right, and you're one of the only digital asset insurance providers to be cover holder of Lloyds. So how difficult was it to get Lloyds on board?
A really interesting question because, the initial reaction I would have is that it was very difficult, but it really was difficult for all the right reasons. Lloyds, is fundamentally the gold standard when it comes to insurance worldwide. And they have a very rigorous process that we had to go through as a cover holder. And it required extensive vetting of our team, our underwriting, our policy form, and of course, our overall business case. It took years. Lloyds has been a great partner. We actually went through their innovation lab to kind of get us introduced to Lloyds to understand how to navigate their application process, and also our carrier partner, our carrier sponsor, Arch, who we've been working with for years. We've been working closely, with Lloyds, with Arch, to understand how to underwrite this very complex risk. And that's why, as I said, while it was difficult for all the right reasons, making sure we comply with all the aspects that Lloyds requires us to operate under globally.
Do you think a better regulatory framework will enable legacy companies to provide covers to companies operating in the digital space, Raymond?
As we started looking at this space, we knew that the regulatory environment was an important variable. Understanding, in the US or the EU or globally, how are governments going to respond? So at the most basic level, we think that a clear regulatory framework will help not only the crypto industry, but also people like ourselves building and supplying the required insurance risk transfer solutions. So the SEC in the US asked for responses to, back in 2021, to a policy they were putting out, or a paper they were putting, a position they were putting out regarding the custody of digital asset securities for special purpose broker dealers. And what we stressed at the time was, again, the important role that insurance plays in this industry, because what's unique is we provide an independent third-party assessment by ultimately a risk-bearing entity to evaluate, for example, custody processes and procedures. That's really important. And it's very difficult for a regulatory body to stay on top of this very fast-moving industry, an industry that moves, in weeks or months as opposed to years. So a potential risk around a regulatory framework is that it may become outdated very quickly, and that could limit or prevent or just impact overall innovation. We would contrast that with an insurance-led approach, where we, an independent party, are doing and making sure we are on top of all of the quickly changing, for example, custody technologies and approaches. We think that that ultimately is going to provide the best answer for the industry. And our view really hasn't changed. We think that insurance plays a critical infrastructure role. And if you look at some recent experience around cyber risk, we would argue that, being a non-specialist, especially in the crypto space, is just really, really challenging. And it poses barriers to anyone looking to enter the space. So that's where we have excelled, is creating a company, an insurance entity focused exclusively on crypto. We understand the underwriting, whereas others who don't have the expertise, they're very, very limited. And that's been the advantage of us by focusing on crypto so exclusively.
On that note, let me take a quick break. On the other side, we'll continue our conversation with Raymond Zenkich. Welcome back to the Blockchain Startup Show. This week, we're in conversation with Raymond Zenkich of Evertas, which is touted to be the world's first crypto insurance company. Raymond, we've seen a lot of retail investors losing their investments due to hacks. Do you think users should demand protocols to have insurance rather than just having an audit?
Aman, our view early on was that there would need to be what we view as platform policies. So we do the underwriting for and underwrite custodians or exchanges. And that's where the underwriting, needs to occur for what we consider a platform policy. So these are places where once they have a policy in place, they can extend coverage to their end customers. So if you're a custodian or an exchange or even a custody technology provider, getting an Evertas policy really means you've met a very high standard, and you can then extend coverage to your customers. So customers, they may be provided with a baseline level of insurance, but if they want to purchase more, they can, because we've done the underwriting. And it's really that underwriting that plays the central role to allow end customers to purchase more insurance. It's not possible to underwrite every retail customer. So our approach is to underwrite the custodian or the exchange and allow the end customer to purchase additional insurance. Our platform product really fills a unique need, and we see it growing moving forward.
Sure, and given the premium to cover ratio in the digital asset space is, one of the highest, do you think it's a supply side problem where enough capital is not present, or do you think it's a demand side issue where insurers don't have a large base to cover the risk pool?
Again, excellent question, Yvonne. Insurance ultimately is a marketplace with supply and demand, as you've noted. Our view is that the pricing today, look, it accurately addresses the transfer risk that is out there. It's driven by several factors, ones that are probably very familiar with some of your audience. So limits, so how much coverage are you seeking? And then some more specific to the insurance industry, like loss ratios. How risky are the coverages being put in place, and what are the losses that you experience? Those are just two examples, but the pricing can get quite complex. And it's also important to note that pricing differs by policy type. So, for example, directors and officers policies typically have a higher rate online. That's how you can think about pricing. They have a higher rate online than crime or theft policies. And again, it comes back to these two issues of loss, or primarily two issues of loss ratios and limits. So it does come down to supply and demand. Our view is that over time, as the risk is better understood and companies in the space operate with proper risk mitigation techniques, that pricing, may in fact come down. But right now, the pricing we think accurately reflects the industry.
Right. And what, according to you, are some of the innovative user case or novel assets that you're offering for cover?
The platform product itself, I would say, is a very unique and novel case, allowing our underwriting to take place at an enterprise level and extending that down to an end customer. So that we think is actually very novel. If I go back to some of the policies that I've mentioned, these are all emerging very rapidly today. So think about smart contract insurance. We have an ability to underwrite those today. Property-related coverages for non-fungible tokens. We can provide coverages for those today. Technology E&O, staking or slashing. These are all innovated within the crypto space. So we are at the forefront of making sure we understand the technology. We can then translate that into an insurance policy, through our partners at Lloyds, and provide coverage for these really innovative areas. And these are changing very rapidly. So that's why I come back to our team. It is just so unique in this space.
And what advice would you give small retail investors on safekeeping their digital assets?
Yvonne, our advice would be look for regulated custodians or exchanges in the US, the UK, or EU, and understand the insurance they have in place. Look for an Evertas insurance policy, for example. Make sure that you understand the type of outside independent review they've had regarding their infrastructure. It's really important. You could also, we would think for more sophisticated users, you can do self-custody. However, a lot of the very same issues that we underwrite for, someone doing self-custody also needs to look out for. So if you want to do self-custody using, say, a cold storage or a hardware wallet, you need to make sure you're using best practices. And that ultimately is what anyone should be doing and using to make sure they are having the highest level of protection around their assets.
Do you have plans, Raymond, to cover, small retail users? Because India has seen a wave of fintech startups providing, sachet insurance covers in Web 2.
Today, the way we plan on addressing it is really through the platform product we discussed. So we want to be the underwriter and provide the insurance policy for the institution. So ultimately, it's going to be through a platform type product where we underwrite the entity and the entity provides the insurance coverage for the retail user.
Well, that sure sounds interesting, Raymond, but let's pause here for a bit, and I want to welcome on board the COO and Head of Investments for SGC, Ian Whitcop, to the show. Ian, welcome again. Thank you so much for joining in. Now, let me start off by asking you this. What advice do you have for new entrepreneurs who are entering this space?
I'd first say that insurance is an amazing vertical to build in. It's a great business. There's great learnings. The space is digitized and really embraced innovation. It's a space that I'm familiar with. I've worked in as well, launching a cross-border insurance protocol, insurance product. Now, getting back to the basics for an entrepreneur. It's understanding the key success factors of the vertical that you're entering and making sure it's a match for you. And what I mean by that, blockchain insurance, the key success factors might be something like the ability to educate both for customers and policymakers about your product. At the end of the day, the purpose of insurance is risk transference, mitigating the financial impacts of potential risks. An entrepreneur's job is to help policymakers understand how blockchain insurance can fit into a regulatory framework, how they make customers safer, etc. Second distribution factor comes down to, or second success factor comes down to distribution networks and partnerships and tie-ups with other companies to distribute, in this case, the Evertas product. So in traditional markets, a huge distribution channel for insurance companies is actually banks. It's called bank assurance. Now, in digital asset, it probably won't be the same model, but there will be a model like this that is embraced. The concepts remain the same. Another key success factor, assessing risk and underwriting and pricing correctly, and then building a reputable brand. So the point I'm making is that blockchain is a very engineering heavy space, and tech will always be very important. The tech needs to meet a high standard. But in this vertical, in the vertical of insurance, skills beyond just tech are needed for entry and to be successful.
Where do you see the insurance landscape, not only for custodial use cases, but even covers for products like DeFi, L2, L1 going forward?
I would say that blockchain technology, digital asset technology is very nascent and we're early. Use cases are still being built, trust is still being built with consumers, regulators, traditional counterparties, things like that. Insurance promotes trust in an ecosystem. All parties feel better about interacting with each other if they know that, because of their insurance provider, a lot of the key risks are mitigated. This applies to all use cases across the industry. That applies from DeFi to custody loss insurance and all of the products that Evertas is providing as well. So compared to other financial products, I would say insurance is extremely underdeveloped in the blockchain digital asset ecosystem. Still a lot of innovation to come there. We're really excited to partner, and we're quite frankly very comforted having a partner like Evertas innovating and filling this insurance gap in the digital asset space.
Got it. Well, Ian, Raymond, it was a pleasure speaking with you both. And with that, ladies and gentlemen, it's a wrap on yet another episode of the Blockchain Startup Show. This is me, Avan Dabash, signing off.